Hi everyone, today let's get an understanding about the basic financial accounting cycle. So in financial accounting, you will start your process with the transactions and events. So whatever the transactions and events that you have in your business, when you are running a business, you will have a lot of transactions and events. So you will have to record these transactions somewhere, right? You have to write it somewhere. If not, you have to record it somewhere. So whatever the transactions and events, for the first time, we will be recording it in the prime entry books. For the first time, we will be recording it in the prime entry books. So what is this prime entry books? Very simple. Prime entry books are the books where we are recording the transactions and events for the first time. So when you are recording these transactions and events for the first time in the prime entry books, you will have to have some source documents. That means for each transaction and event, you should have an evident document, a supportive document. So based on that supportive document, we can record all the transactions and events in the prime entry books. Once you record the transactions and events in the prime entry books, here what you have to understand, when you are recording transactions and events in the prime entry books, we are not posting any double entries. Dual entries we are not doing in the prime entry books. So next step is post in the double entries. So post in the double entries will happen in the ledgers. So next step is what? Post in the double entries to the ledgers. So if you take these ledgers, there are three types of ledgers which is we are using in accounting. One is the purchase ledger, other one is the sales ledger, other one is the general ledger. So you just remember ledgers are like big books where inside those books you have lot of T accounts, if not ledger accounts. So now these days we are not using books, everything is systemized, computerized, we have computerized softwares. So for you to get a visualized learning, I would like to say, okay, ledgers are like big books that you have. In those books, you have lot of T accounts. In these T accounts, if not in these ledger accounts only, we will be posting all the double entries. So once you post all the double entries in the ledgers, we have to get the closing balances all the ledger accounts. Closing balances. Closing balances of the ledgers. So using these closing balances of the ledgers, next what we will be doing, we will be preparing something called trial balance. We will be preparing the trial balance. Using what? Using the closing balances of the ledgers, we will be preparing the trial balance. Then next is using the trial balance and using some additional information. Using some additional information. In financial accounting, we will be preparing the financial statements. So what are these financial statements? Like income statement, balance sheet, cash flow statement, changes in equity, notes to the accounts. So you will be preparing these financial statements. Finally, by including these financial statements and certain other documents like chairman report, board of directors, and the management and auditor's report, by including all these things, including the financial statements and including whatever the other stuff that I told you right now, we will print or we will prepare something called annual report. So in annual report, you have all the financial statements and other stuffs as well. Then next what we will be doing, we will be providing this annual report for the users of the accounts. For users of the accounts, if not for the stakeholders to make decisions. So that is what accounting is. We learn. Accounting is we are providing the business information for the users, for the interested parties to make decisions. So by going through this entire process, we'll be providing this information for these users or for the interested parties to make decisions. So this is the basic financial accounting cycle.